This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Carol, Israel's military said it struck Hamas targets in Gaza overnight, and Israel also responded to fire from Lebanon by hitting Hezbollah assets.
So let's get to Mick Mulroy. He is back with us, former Deputy Assistant Secretary of Defense, a retired CIA officer, understands this. We've been leaning on him big time. He's also co-founder of the Lobo Institute, so obviously looking at areas of the world where there is conflict. Mick, we want to get you to weigh in. We know you're monitoring a lot of stuff right now. Another crazy week, if you will. How are you thinking about it on this Friday?
So first of all, great to be with you, and it's great that these two American hostages were released, a mother and daughter. They're staying because of humanitarian reasons. She was very sick, but it's always good to get Americans released. But there's several more, and there's around 200 total hostages held by Hamas right now, which of course is a war crime to hold civilians as prisoners of war. So that is a very good thing, and hats off to everybody that had a role in that, Qatar, for example, and likely the FBI and the CIA. So good for them. But there's a lot more to do when it comes to getting hostages out, and it does look like we are on the edge of this ground invasion that could be coming with the next 24 or 48 hours.
We want to also bring in our Bobby Ghosh. He's a Bloomberg Opinion columnist, but has covered the Middle East for a long, long time. And, you know, I know, Mick, you've got to run, but Bobby, I wonder if you have a question for Mick, who's also been covering this. We'd love to do that, Mick, before maybe you have to run. Bobby, you have a question, real quick one?
Well, yes, absolutely. What I would like to ask Mick is basically the events of the last 24 hours, these missiles and rockets that have been directed at American targets as well as Israel, from not just Hamas, but also, and not Hezbollah, but also from Shiite militias in Iraq, and it looks like the Houthi militias in Yemen. What they all have in common is that they're all sponsored by, paid for, trained by Iran, and how much of sort of Iran is looming over the backdrop of all the decision making that's taking place in Washington over what to do next in the region?
That is a very good question and a very astute one. You are correct. Hamas gets about 90% of its military funding from Iran. Hezbollah, very similar support. Multiple militias in Syria, and the Houthis, or Ansar Allah, in Yemen, who has been waging a bloody civil war, as I'm sure you're aware of, since around 2014. They all have Iran in common. They are especially when it comes to their advanced weapon systems, they get almost all of them from Iran. And it's likely that Iran could use that connection should Israel, and it looks like they will, launch a ground invasion into Gaza, particularly if Hamas looks like it's going to be destroyed. There'll be a lot of pressure on all of those entities you mentioned, and Iran could orchestrate the whole thing. And I think that's why the United States, and that's why they said, they place so much military capacity right off the coast of Israel with 2 carrier strike groups, a Marine Expeditionary Unit, and more elements moving into the area.
Hey, Mick, I know you got to go. We are hearing from Antony Blinken, Secretary of State, right now after the release of 2 American hostages. And that's where I want to go with our last question to you. Just give us an idea of what happens behind the scenes to secure the release of hostages, even though there are so many more that need to be released.
So I think this is such a difficult military problem. Even the best units would have a hard time rescuing 200 hostages, likely in tunnels, likely it's already wired to explode if they get too close and might actually facilitate the recovery. So all these diplomatic efforts are truly their best option for getting out. And I hope that they continue and we see more hostages coming out.
Hey, Mick, thank you so much. You've been great throughout this crisis, and we know you've got to run. But that, of course, is Mick Mulroy, as we said, former Deputy Assistant Secretary of Defense, retired CIA officer, retired U.S. Marine reservist, and co-founder of the Lobo Institute, which advises, consults, and teaches on conflict. So appreciate he weighing in. And I've got to say, we've also been leaning big time on our own Bobby Ghosh, Bloomberg Opinion columnist, covering culture, but he spent many, many, many years covering foreign affairs, particularly from those conflict zones in the Middle East. So, Bobby, we do want to stay with you. I do think about what has to be front and center for the United States right now in terms of in a fluid situation and trying to calm things down, but it does feel like with these additional conflicts or outbreaks, if you will, that it does feel like there's slowly a little bit of a creep.
There's always a risk of that when the United States commits itself to a situation. Even if the commitment is for peace, there's always a risk of getting caught up in a war-like situation. So yesterday, the reporting from our news colleagues of these missile attacks from Yemen, which is a really long way from Israel, but these missiles, it would appear, were heading in the general direction of Israel. They would have to fly over quite a lot of Saudi land mass as well, and they were taken down by an American warship. That sort of, now nobody, no human being was hurt in the process, but it is an American ship taking aim at a missile that is heading in the direction of Israel. So the United States, to that extent, is already engaged in the war.
What does that, Bobby? What does that mean, though, when the U.S. is engaged in that sense? And I asked the same question to our own Nick Wadhams earlier, because does it risk, in your opinion, the U.S. being drawn into this conflict in more so than it already has been?
Yes, it does. But the crucial thing is that it took place a long way from the main theater of the war, and that it did not involve American boots on the ground, certainly, and it did not sort of involve shooting down a plane, for instance, or a nest of fighters. No blood was spilled. So that gives the U.S. a certain amount of distance. But it is a cautionary tale. It tells you that the longer this conflict rages, the more we might find ourselves in situations like this. And the fact that the U.S., that President Biden has sent 2 aircraft carrier groups into the Eastern Mediterranean,
right?
They're not there just for show. They're there to warn off Israel's other enemies and our enemies from trying to get involved. And if they do get involved, then a moment may come when the United States is forced to follow through on its threats. We should all hope that moment never comes. The big part of President Biden's visit to Israel was to try and make sure that there was a humanitarian corridor into Gaza.
Right.
And I think he was encouraging the Israelis to hold back, not to sort of rush in with a sense of vengeance, but to be more measured, to make more efforts to sort of prevent hurting civilians, and to have a plan for what happens after the fighting is over.
Do you think it was smart of the president to tie aid to Israel and to Ukraine and to concerns about Taiwan and also, the Mexican border, like to tie it all together about the protection of American democracy? And again, I do this to you all the time. I've got about 30 seconds here.
Well, it's the nature of our politics now, unfortunately. In an ideal world, he would be able to do all those things separately, and you would have a responsive Congress that would appreciate what's going on in the wider world. You and I know that that's not what the Congress is like right now. And to get people's attention, to get the attention of the folks on Capitol Hill, the president's having to sort of bundle all these things together. There is a common narrative, and he hit those notes yesterday in his speech.
Right.
But in an ideal world, he wouldn't have had to.
We're smarter because of you weighing in on all of this. Bobby Ghosh, Bloomberg Opinion columnist, as we said, has covered foreign affairs for a long time. He currently covers culture, but just knows so much about what's going on in that region.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
Remember that strong U.S. retail sales data this week?
Yeah. Turns out American consumers are still spending money.
A lot of different things.
Yeah, American Express's third quarter revenue and profit also soaring to record levels as the company continued to attract new cardholders who are willing to pay an annual fee for its premium products. Still spending slowed a little bit. It's kind of a mixed report.
It is kind of a mixed report. So we're getting different facets of kind of what's going on with the American consumers and different types of consumers, to be fair. Tom McGee is back with us, president of ICSC. It's the organization formerly known as the International Council of Shopping Centers. It's the trade association of the shopping center industry, as we'd like to remind our viewers and listeners. He is back with us on Zoom in New York City. Tom, how are you?
It's great to be with you, Carol. I'm doing well. Hopefully you are too.
We are. We're trying to keep up with kind of the news flow and just deal with the world, which is pretty heavy, as you would imagine. The shopping center industry, we did get a strong retail report this week. What are you guys hearing front and center from some of your members?
Well, the consumer continues to be resilient. We're heading into the holiday season with an expectation for a positive holiday season, 3.8% growth. 7.6% growth in the food and beverage industry. So the consumer continues to be resilient, certainly concerned about inflation, no doubt about that. You're seeing the consumer, particularly during the holiday, with an expectation to spend more in discount department stores specifically, but still strong. And, until something dramatic happens in the employment market, I would expect the consumer to continue to be resilient. That's the ultimate consumer-facing industry, and consumer confidence drives behavior. And if you have job security, you tend to be more confident in spend.
Where are you seeing spending patterns, and how are you seeing spending patterns, or how are your partners seeing spending patterns right now at these shopping centers, which have really morphed from sort of having anchor tenants and big box stores to really experiential places in a lot of these newer areas?
Yeah, so our industry covers everything from, large regional malls to, a classic grocery anchored shopping center, an open air center, and everything in between. You're really seeing retail evolve quite a bit. To your point around, regional malls are a lot more experiential in nature, to really open air centers, which are kind of on fire right now in the post-pandemic environment because of the multiple uses of the physical retail.
Yeah, I want to bring up an example of this, Carol. I don't know if you got to experience this last week, Carol, but the two of us were in LA, and I was there for a conference. Carol and I were there for a conference. We stayed in Century City. Your room overlooked the Westfield Mall,
yeah,
right?
It was right there.
Yeah, so I actually went to dinner there right before I met you at the airport on our way back. I was there with a friend. It was an amazing indoor/outdoor experience, and it was like a mall, unlike one I've ever been to. And
isn't that the one that had Italy?
Yeah. Sarah went there as well.
Sarah Livesey, yeah,
one of our producers. And I got it. It was crowded. It didn't feel like a typical mall. This type of thing only works in California because the weather is perfect there all the time in Southern California. But they had like outdoor furniture that people were like lounging on and looking on at their phones.
Like just
they
hanging,
had
right?
They were just hanging out there. I was like, what is this, 1990?
Yeah, it is interesting, if you think about it, Tom, kind of the rethink on what kind of malls have, kind of morphed into.
Sure, I think that's a great example, and different properties have different offerings. Whether it's the American Dream here in the tri-state area.
Great place to teach your kids to ski. Seriously, it really is.
To your point around different weather patterns and different drives different offerings, but malls have evolved, and the story of the demise of the American Mall has been written for the last 30, 40 years.
Okay, but to be fair, the American Dream Mall is struggling pretty badly right now.
Again.
Well, I think every property has its own history, but my real point is that the mall industry, the demise of the industry has been written for decades, and yet we're still at basically the same number of malls in the country today that we had 20 years ago. And so they're very resilient, and good real estate will always find its purpose. And so the evolution is a big part of retail and a big part of real estate. And so the mall sector is one part of the industry, and then you have what your Target anchored, your Walmart anchored, open air type of center, or even grocery anchor centers. And what's happening is in those physical retail locations, those stores are really starting to use that physical space, not just for traditional shopping, but also as really mini fulfillment centers. And so it's an opportunity to, fulfill online orders, to service that last mile. And that really became something that, accelerated quite dramatically during the pandemic era. Obviously, right. By definition, what was happening, people couldn't congregate in physical space as often. And so retailers were forced to adapt. And that's become very effective. And so the demand for physical space, particularly in that open air sector, is super strong right now. If you look at physical retail space in the United States and where it was at the financial crisis in 2008 and where it is today, while population growth has accelerated, while GDP growth has accelerated, retail sales have almost doubled during that period of time.
Right.
The amount of physical retail space has not, increased almost at all. And so you really have a mismatch of supply and demand now,
right,
where there's a lot more demand and not enough supply to fill it.
Do want to point out that we reported, Bloomberg News, back in September, that New Jersey's American Dream Mega Mall losses quadrupling in 2022, widening to $245 million. This is a special situation, it does feel like, but we continue to report on it. Hey, Tom, just got about 30 seconds left here. You guys have a survey out for the upcoming holiday season. Anything that kind of indicates a possible recession or consumer slowdown? And again, just got about 30 seconds, please.
No, we're forecasting positive retail sales, 3.8% growth, 7.6% growth in F&B. 8 out of 10 Americans expect to spend equal or more than they did last year. So right now, the consumer continues to be resilient.
All right, going to leave it on that note. Listen, have a great weekend. Always fun to check in with you. Tom McGee, President and Chief Executive Officer of ICSC. It's a group that's representing the shopping mall industry. So a good check on the consumer, maybe what's
very optimistic.
Ahead. Yeah. I don't know. I can't tell.
That mall was cool.
Have you gone back a lot, though?
Oh, I'm talking about the one in LA.
Oh, the one in LA. That was the
first time I was there. The American Dream, we'll go back there.
Yeah.
Yeah, I'll do some skiing.
Yeah.
It's a good way to teach your kids to ski.
I have to try that. It's kind of fun.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, if you even have a cursory knowledge of the retail world, you probably know Chip Wilson. He's the founder of Lululemon Athletica, which he ran until 2013. That's when he stepped away following some particularly insensitive comments about how the pants looked on some women's bodies. It's also probably why you know a lot about him, because he kind of was notorious around that time. Oh, Carol, he's also got a net worth of about $7.3 billion. That's according to the Bloomberg Billionaires Index.
But there's one thing you probably didn't know about him, and that's what we want to get to, because it's a mission. It's a situation, if you will, that he's spending a lot of money to correct. So let's get to it, because this story is in the current issue of Bloomberg Businessweek on newsstands, online, and of course on the Bloomberg. Ari Altstedter is with us. He typically writes about Canada real estate, but he is writing about Chip Wilson and his current battle. He is with us from our Toronto bureau, and with us is the editor of Bloomberg Businessweek, Joel Weber, in our Bloomberg Interactive Broker studio. And Joel, we talk about Lululemon a lot. It's a company well known to certainly the Bloomberg Businessweek audience. Chip Wilson too, but I'm not sure that many knew about his own battle that he was facing.
Yeah, and obviously Chip Wilson, founder of Lululemon, has built this thing into a juggernaut and created a whole category. What most people didn't know is this whole other personal side to his story, which when we found out about that, we were like, we really want to go big here, and gave Ari the platform to be able to do so. What's really amazing about it is he's got a fortune, and he is willing to basically throw that fortune to help solve something that may only ultimately benefit him, or hopefully a slightly wider group of people who otherwise, if it was left to the normal kind of way of that science and drugs and cures like this kind of happen, may actually not ever be addressed, right? So Ari, talk to us about Chip Wilson and what he's been going through.
Right. Well, Chip Wilson, as you say, in his public persona, he didn't really let on that he's actually been battling this very rare form of muscular dystrophy since he was diagnosed with it in his 30s, his early 30s. So for the past over 30 years, he's been watching his muscles slowly waste away. He could more or less carry on with normal life despite this disease. He had to give up squash when he couldn't raise the racket above his head. He had to give up yoga when balance became too difficult. But he sort of tried to ignore it. That all changed around 2010, late 2018, early 2019, when he was taking a trip to China, walking out of customs, and he fell. Got up, didn't know what happened, walked forward, fell again. He started to lose the use of his legs. Now he thinks he's got about 5 years until he's in a wheelchair, and he has an urgent need to do something about this now. And so he set aside $100 million, and he says, I'm going to use it to cure this form of muscular dystrophy that I have in the next 5 years before I need that wheelchair.
I want to ask you, I am shocked that this story kind of hasn't come out. So how is it that it was kept so quiet?
Well, Chip Wilson is a very outspoken person. I think anyone who knows anything about him knows that. But he's kept this private. It wasn't, I mean, in my discussions with him, he sort of said it wasn't a secret so much as it just wasn't something he talked about publicly. But that changed when he got this urgency to try to find a cure and caused him to launch this initiative. And spend all this money. And now he's started talking about it very publicly in the hopes that it'll make his venture more effective, and it'll get more researchers, more investors, more companies on side to try to get a drug, a therapy, something to help within his timeline.
Well, let's talk a little bit about the initiative and where the $100 million is going. There's a great scene in here where you spent some time with him, not just at his home, but at his family office as well. And he's essentially creating a business around trying to find a cure for this, including bringing in somebody who has a lot of experience when it comes to pharmaceuticals.
Yeah, it's a really interesting sort of emerging model of drug research driven by very wealthy people tailored to their specific and very urgent needs. So he hired a veteran pharmaceutical executive called Eva Chin, who also is a physiology PhD and has a lot of expertise on the academic side as well as the private side, to essentially run this. It's sort of a cross between a government research agency or a granting agency and venture capital. Try to seed money into all sorts of companies, as many different companies as possible, which are working on promising potential therapies that could be applied to this condition, and to try to get them through what's known in the research community as the Valley of Death. Now, the Valley of Death is between basic research, which is the kind of stuff academics do to come up with ideas for potential therapies, and then on the other side, human clinical trials, which there's a lot of private money available, investors who are willing to take a punt and see, once it's ready for clinical trials, let's see if we get it the rest of the way. But it's getting between those two stages, basic research and human trials, that a lot of drugs just get lost. A lot of ideas just fail. Up to 90% is the estimate. And so he's trying to get as many potential ideas through that Valley of Death as possible and into clinical trials in hopes that one of them will work out.
So how close does he think he is to something that either resembles a cure or at least really helps him?
Well, I mean, it is just sort of starting out. The initiative launched only last year. There is precedent for something like this being very successful. As I said, it is an emerging model. Wilson has explicitly modeled his initiative on another one called the SMA Foundation, and that was started by a hedge fund tycoon and his wife to tackle another very rare disease called SMA, because their daughter was diagnosed with it. And they spent $100 million of their own money, and eventually not one but 3 therapies came to market to tackle this disease. And many physicians consider it effectively cured, because now when an infant is diagnosed with it, their symptoms can largely be managed. So he looked at that model and said, well, if they could do it for their daughter, I want to do it for myself, but in a much faster time frame. And so, like I said, he set aside $100 million for this. He's already distributed about 30 million, and they're looking for more opportunities. He uses a sort of sports metaphor. He's Canadian, maybe hockey. Shots on goal. They want as many shots on goal as possible,
right,
in the hopes that one of them goes in.
All right, great story. Ari Altstedter, of course, writing in Bloomberg Businessweek, the new issue, joining us from Toronto, and of course, Joel Weber here in our Interactive Broker studio. As we said, new issue on newsstands, online, and of course, on the Bloomberg terminal.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
You drive, say you crazy.
It's the question that drives us.
You drive me crazy.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just got about 18 minutes, just under 18 minutes to be exact, left in today's trading session. Quite a week. We're pretty much, though, near or low, certainly on the Dow, but pretty much so on the S&P 500. Of course, Denise just breaking down the numbers. So down on the week overall as well. And, it's been a week where, once again, you see yields moving up substantially. Right now, that 10-year, though, it is below 5%, 4.92222 to be exact.
I'm actually taking a look at the S&P 500 right now, Carol. We've moved a leg lower, as you mentioned. We're at the lowest right now since June of 2023.
June of 2023.
So we've gone back to,
right.
Beginning of the summer.
The lower trend. Right. All right. So let's see what our Drive to the Close guest has to say on this Friday. Ross Mayfield is back with us, investment strategy analyst at Baird Private Wealth Management, on Zoom from Louisville, Kentucky. Hey, Ross, nice to have you here with Tim and myself. I am curious always when we get somebody who's outside New York City, do you guys spend as much time talking about Fed and Jay Powell and monetary policy and 5% yields?
They got bourbon there.
Yeah. Or maybe you're doing it over bourbon.
Yeah, the bourbon helps with the 5% yields and all the Fed watching, that's for sure. But we do. It's what our clients are worried about. It's what our clients are invested in the market and in the fixed income market. And so this move in yields and what the Fed is doing, and particularly with how high profile the Fed has become, speakers every other day, Jay Powell, kind of a minor celebrity. So yeah, it's what we're thinking about and what we're talking about a lot of the time. And yeah, the bourbon helps, especially on a Friday afternoon.
Yeah. So I've had some great trips to Louisville, by the way, Carol.
Have you?
Oh, yeah. Did the Derby a couple times. The cyclocross world championships were there one year.
Tim Stenovec.
I had a really good friend who lived there for a few years, and I used to go hang out with it. It's a cool place. We should do a remote there.
We need to work on
Ross,
that.
I'm sorry. I'm getting off topic. I'm
to-do list.
Memory lane.
You guys are welcome anytime.
Here. Thank you. It is a great city, though. Talk to me a little bit about where you think this new era of higher rates will take us, especially with regard to equities, because the truth is we're in a place where we haven't seen rates this high since in many people's careers, to be honest.
Yeah. So I think there's two things to break down. So the first thing is the rapid move and kind of aggressive, over the last couple of months. That's obviously tough for the market to digest. Moving at the long end, especially up that much in such a short amount of time is tough to digest, especially as you mentioned, when a lot of the index constituents have not existed in a world of higher rates. But I do want to be careful of overreacting and acting like a world of 5% interest rates is just a world where equities can't work. We don't have to look that far back. The 80s and 90s were one of the great bull runs of all time. And, 10-year yields were higher than this. The Fed was aggressive through a lot of that period. So it's not that the world of stocks can't work, but you do want to be a little bit more selective. I think, moving up in quality in a world like this makes all the sense in the world. And then it just takes time to kind of digest the move. So higher for longer, is not a headwind in and of itself, but a move like the one we've seen takes some time to digest, I think, is what we're going through right now.
Well, I think it's very telling when you go to your guys' website and the first page, one of the things that comes up is a segment on protecting and growing your cash. Says a lot about kind of the environment we're in. How much of you guys are wealth management? I'm assuming your individuals or the folks that you are working with generally are of a certain income strata. Having said that, what is top of mind for them? I'm assuming it's wealth preservation. And does that mean increasingly putting it in cash? Or are they saying, I'm long-term, I'm going to ride this out?
It's a little bit of both. I mean, we're definitely talking to folks about the long-term plan, things like the war in the Middle East, investing through geopolitical events, having that long-term lens. But I would definitely be lying if I said that one of the primary questions and one of the primary talking points isn't, wow, we can finally get something on our cash. Savers are finally being rewarded after 15 years of 0% interest rate policy and negative rates abroad. So people do really, really like their cash, their short-term treasuries right now. We're even talking to folks about just moving out the yield curve a little bit. I mean, now that the yields on the long end are competitive with the short end, and you could possibly get the capital appreciation bump, if yields were to fall in kind of a downturn or a mild recession next year. So we're talking through all of that, but you're absolutely right. The wealth preservation and just the general excitement about being able to earn something on your money is something that, I haven't really seen in my career, and something that I know a lot of our clients, haven't gotten used to in a long time. So it's good to kind of barbell the wealth preservation and the yield you can get on cash with the long-term stock investment.
Well, does it change the way you're thinking about portfolio construction significantly?
It does and it doesn't. I mean, we're advocates for diversification, and we were before and after this big move in rates. I think now, we're in a bond bear market, but you can now go to a client, go to a presentation and say, look at this, 5-6% yield on a high quality fixed income. So it does change the conversation a bit. And it allows people who are in the drawdown stage of their retirement, or in a more of a wealth preservation stage, to not feel like they have to be overexposed to equities and that volatility because it's the only asset class in town. Tina, there is no alternative, was the story for a decade. And for people who were in that, kind of preservation and drawdown stage, it was really hard to find yield. There were a lot of times we would look at portfolios and see, high yielding things like MLPs or products that weren't necessarily protective of cash, but there was that urge to have some yield because they were living off that yield, or there was an income component that they needed. Now we can have conversations that are much easier because there's treasuries, high quality bonds in the corporate market that are yielding 5, 6, 7%. And, inflation has come down. So that's a real yield that we haven't seen in a long time. So it hasn't necessarily changed how we're building portfolios, but it's made the conversation a lot easier, a lot different. And also, not forcing folks who are in wealth preservation far out on the risk spectrum where they don't really want to be.
You sound pretty calm. So nothing in this market is freaking you out?
Bourbon.
No, seriously. No, but seriously, you sound pretty calm and complacent. I mean, nothing's freaking you out in this market?
Again, it's just what we talk to our clients about. It's just taking the long-term view. I mean, in the wealth management space, most of the people that we work with, even who are, near the end of their working career or in retirement, still have a long-term time horizon. So when we talk about things like geopolitical events, most of these people have invested through wars in the Middle East, through things like 9/11, even a lot of our clients back to the 1970s. And they know, and we talk about, while it was painful and while there are years of big drawdowns like we saw last year, ultimately, the stock market made a new all-time high last year of all time. So we can focus on the long term with our clients.
All right, 20 seconds. What is your favorite bourbon drink? Let's just go there.
It's bourbon on the rocks.
It's an easy one.
Do you have a favorite one?
I don't. I mean, I
like a
brown
whiskey
liquor
sour.
doesn't really agree with me.
Oh.
I get bad headaches when I drink this stuff. But, I make exception for going to Louisville.
Okay.
Come on down anytime.
We'll put that on the list. Hey, guys. Ross, be well.
What
Have
about
a good
you,
weekend.
Carol?
I told you, whiskey sour. Right?
That works.
Ross Mayfield, his investment strategy analyst at Baird Private Wealth Management, on Zoom from Louisville. Speaking of alcoholic, Louisville.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.